Hello, Maverick traders, and welcome out to your daily market roundup. This is Sonkit here, and I'll be breaking down today's market price action. It's a Thursday, June the 12th. Let's get into it. As always, we'll be breaking down today's market price action, take a look at broader markets, see what's really happening in the news, and then we'll take a look at some possible setups. Let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So jumping into the market analysis, well, let's just take a look at the numbers today. And we have another positive day in the market. So overall, you can see modest gains across the board. We had the small caps that were underperforming, but everything else seems to be doing well. Gold is back up on the run here, close to 1% gain. Oil pulled back slightly, but overall has been up like 5% for the week. Now, as far as the headline goes, we actually have some, as we take a look at CPI numbers we had on Tuesday, and then we had the numbers today from the PPI, and both are coming below expectation. And before the announcement, we actually had a weaker price action in the markets. I think markets are down like 0.5%. So we just saw a nice rally after that. So overall, market seems to be in a better mood, especially as we're getting this little weaker data. It's definitely raising the bets for Fed to cut rates and so forth. Now, one more thing that we need to pay attention to as well is some of the economic data here. We have seen a third straight weekly gain on that employment claims. Remember, one of the things we talk about is overall market's been doing really well, economy is doing great. We've seen some weaker numbers in the past week. On Friday, we actually had a better than expected jobs report. So that changed some things. But then here we are getting some weaker data again. That's putting more pressure on the bond yields. It's putting more pressure on the US dollar. And the equity market seems to be sort of continuing moving higher. Now, when we take a look at this chart here, it's kind of fascinating to say, well, we are almost very close to the all-time highs. So we have seen a massive recovery, and here we are slowly climbing higher. I was definitely more looking at sideways with 6,000 on the S&P as a resistance, but I've definitely shifted my outlook, and I've kind of gone more bullish as we got more a bit of a breakout here. So we still have a little bit more climb to for the S&P to get to those all-time highs. I think it's like another 1.5% on the S&P. That'll get us to that point, and that's again will be the next level of resistance. But if you look at the candlesticks, overall, I always like to give an example of a gravity. And you seem like gravity is on the upside. You get some down days in there. But again, everything keep getting pushed to the upside. So overall, not a whole lot change in the markets. Now, the bond yields is the one that we'd be paying attention to. As you can see that the bond yields have definitely gone sideways. We had a massive gain on Friday, but then for the last 4 days, we have seen a straight decline. So we're definitely... with this weaker data, we're definitely seeing putting a lot of pressure on the yields. Now, when we take a look at the markets, and if you look at the advanced decline ratio, I must say that it was a pretty split. But take a look at the plus minus 50 MA, and remember we talked about market breadth. Market breadth has continued to improve, down only 21% below the 50 MA. So again, that's just telling you that the money is flowing into the markets, and especially broadening into not just those top tech stocks, but then it's moving across the board there. So when we take a look at the heat map today, you'll see some of the big names were kind of negative, but definitely there's a lot of pockets of green. So we definitely need to pay more attention to, where is that relative strength? Where is the money flowing into? Now, market outlook, nothing has changed, +2. I think so far you want to be on the long side of the markets. That's just really where we are. So as far as the potential trade goes, I got 4 new longs, 1 sideways, and only 1 short. So let's get into it. Here's the first one, ECL. I really like this one as, I'm looking at things that are likely to kind of break out. And this thing, you can see it's just moving very nicely here. 270 or 271 is the next level of resistance. Once it breaks that, I think it's setting up nicely for a bigger breakout. We got the 20, the 50 MA sloping higher as well. This is the one that I'm paying close attention to for a breakout strategy. Now, here's the second one, EMR. This thing is already sort of running. You can see this was a bit of a range. We got a breakout here, kind of consolidating here. I think it has definitely has more room to run. So looking for, sideways to go higher. In this case, I definitely want to be more aggressive if the momentum is picking up to the upside. Here's the other one that, as I was looking, and this has been on my watch list for the longest time, and you can see this thing has been stuck in that range. This is the MU Micron's technology. Every time I see things kind of, breaking some key levels, this is where we want to be focusing into. Look at the volume here, straight up volume going up, and we are seeing a big break across the board. So, sitting up at 116, you can see it did pull back and then recovered. So I do like this on a bullish, on a bullish strategy here. And then again, this prior resistance becomes a new support. And here's the other one, NVO. Again, this is another stock that got beaten down, but you can see that, it's slowly picking up momentum, getting above the 20 to 50. I think this one easily get towards the 84 to 86 level. This one has that momentum in there as well. And that's exactly what we're focusing on. It's where is that momentum? Which things are catching up, where we can see more, a better risk to reward play. I think these ones that I really paying close attention to. On the sideways play, I have SO. You see this thing is just going sideways, 93 down to 85 here. Anybody looking for a sideways, this one looks like a decent candidate here. And the last one I have is on a bearish side, which is T-Mobile. This thing, you can see that it's just testing their support. I think it did break below today. So, negative volume's picking up over there. So definitely want to look this more on the bearish strategy there. So again, keeping that balanced portfolio, but then as you're getting better price action, you want to add more longs. If markets start to go the other way, you want to balance it by adding more shorts. But at this point, I definitely like that market breadth improvement. And I think we probably want to be more exposed to the upside than to the downside. So again, as far as the market goes, I think this uptrend in the market is there. It continues to be. So focus on the outperformers and, balance it out with some underperformers in there. Tomorrow we have the preliminary consumer sentiment. Again, I won't be surprised if the sentiment comes up better than expected. But outside of that, not a whole lot. And we are back to, those calm Fridays where, just not a whole lot happening. And it's more like cruise control. So not really expecting a whole lot. I think that's where we are. So that's all for now. Thanks for joining. We'll see you in the next one. Happy trading.